This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 13th, 2017. It's a Friday, and we're not superstitious. It's a good luck day. It's 8:40 in the morning, Mountain, as we tape. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy blue-green diamond. This is extremely rare. One of a kind worldwide. You can see it online at rarecoloreddiamonds.com. Featured diamond of the week. We'll talk about diamonds in the second half of the show. As we start taping today's program, Sears Canada closing all of its stores. Sears Canada wants to close all of its remaining stores. The company said earlier in the week that it will apply to the Ontario Superior Court of Justice for permission to liquidate all of its remaining stores and assets. The court will likely hear the motion today as we tape on Friday. If the court gives Sears the go-ahead, the retailer will start liquidation sales of all of its locations on or after October 19. It's expected the sales to last between 10 to 14 weeks. And unfortunately, and our heart goes out to these folks, 12,000 jobs will be eliminated. And that is a blow. I know for quite some time people have been saying that Sears in the United States and Sears in Canada, they had limited time, and it obviously has come true. Venezuela in 2018, talk about inflation, the projected inflation rate, 2,300%. People are starving there. It's a real tragedy. Also, investors in Houston. After the big storm that came through, now you have what some people may call investors, other people may call vultures, whatever you choose to call them. They're coming in and offering 40 cents on the dollar for properties that they would buy from existing owners, and then they would renovate, rent out, and hold on to, and hopefully at some point down the line make a lot of money. As Harold touched on before our show, fires in Napa affecting wineries, just absolutely devastating to see all those wineries and their grape crops go up. A sad, sad situation. And finally, this week, our Prime Minister Trudeau met with Donald Trump, President of the United States. They talked about NAFTA, and they talked about many other issues, but primarily the NAFTA negotiations and where things go there. And supposedly, Donald Trump wants to negotiate with us when it comes to NAFTA. We'll have to wait and see how it goes. One other note, Hurricane Ophelia is on course to strike Ireland and the UK early next week. So as you were saying before the show started, Harold, it has been a crazy, crazy time in the world.
You better believe it has, Randy. It's just unbelievable to think about these natural disasters. The fires now in California are not only burning the wineries, but have burned many homes and killed several people. So that's unusual in a fire situation. We've seen that happen before, but very few people have ever been killed from it. So obviously it's a horrid situation. Between the hurricanes and the fires and the earthquakes and what happened in Las Vegas, it's just an unbelievable time. As far as the markets are going, the markets just keep on going. I mean, the stock market in the United States is hitting records every single day. And it's not that things are great in the United States, it's just that things are so bad elsewhere that whatever investment money is in Europe or Asia or wherever is coming into the U.S. Whether they're getting in late or not, we'll soon see. But the bottom line is that the stock market, the Dow in the U.S., is the only game in town at this particular point, and it's not because the U.S. economy is great, it's just that the U.S. economy is better than other countries around the world. So we'll continue to monitor. At this particular point, because of the rhetoric that's going back between the U.S. and North Korea, gold has taken off again, and gold's up to just below 1,300. It actually hit 1,303 as a high today, but then fell off. We've been through $1,300 gold. That's not a major price point. The major price point for gold is 1,380. If we get two closes in a row above 1,380, then we could definitely see a breakout in gold that could take it back to 15 and possibly all the way back up to the 1920 level that we saw in 2011. So it's been a long time. It's 2017, almost 2018, since we hit the highs in gold back in 2011. So it's been basically almost 7 years of a market in gold that is basically just going sideways. And I guess that's what the government and the markets wanted, because gold never should have fallen to this level. Gold never should have fallen so severely from the $1,900 level, but it was made to drop. And this is not a conspiracy theory or anything like this. This is a true fact. We know that the exchanges in New York where gold is traded and silver is traded, that they raised the margin requirements for gold and silver so many times in succession in 1 week that it took all the leverage away, and it basically scared all the speculators out of the market. You know, what makes up a market in commodities is speculators and hedgers. And without speculators, the whole system doesn't work. So basically, the gold market is traded in a range between 1,050 and 1,300 that it's basically sitting at right now. I think about 2 or 3 weeks ago we saw gold actually hit around the 1,325 level. But again, we've seen that market trading in that range now for going on 7 years, and something has got to happen to break it out. You know, one of the reasons that the gold back off slightly was due to the dollar hitting over par when Trump became president. But now we're not over par anymore. In actual fact, we're way under par. We're sitting at 93 cents. In fact, the U.S. dollar is trading 10 cents lower than it was at its peak when Trump first got into office. So what that shows me is that there's not a lot of confidence in the presidency at this point. I think that's an understatement. I think a lot of people at this point are concerned and actually frightened in the United States about having Trump as a president. I know a lot of people that I know that are fairly successful are all very concerned about what he's done thus far, which is basically nothing, and just the way that he talks and handles himself. So, you know, the thing is that these markets are trading in a range except for the stock market, but it's really only 6 or 7 stocks that are doing extremely well. Others are trading, and other stocks, like many of the bank stocks, have never ever gotten back to the levels that they were prior to the market dropping in 2008, which was 10 years ago. So the fact is that 10 years ago, the Dow dropped from 14,000 to 6,500. That was during the mortgage crisis and that whole debacle. Citibank and Bank of America back then were trading at around $80, $85. Now, I haven't looked at them recently, but I highly doubt they're higher than $30 or $35 right now. So that certainly shows you that even though that the Dow has hit new highs almost every day, it doesn't mean that we're in a bull market here. We're just doing a little bit better than other countries that are suffering tremendously. So don't let your guard down at this point. Don't jump into this gold market until we see two closes above 1380. Otherwise, you could see a retreat in the market. The thing that will actually increase the value of gold is 3 things. One of them is going to war with North Korea. That would definitely propel gold probably back up to the $1,400, $1,500 level almost immediately if we did actually go to war. No matter how bad the rhetoric is, I highly doubt that that is going to happen. Even though he's a madman in North Korea, the fact is it takes an awful lot for somebody to drop a nuclear bomb, and that would cause World War III, basically. So even though, you know, it gets heated and it's concerning and a lot of people are concerned over it, the fact is that I highly doubt that anything is going to happen. What's going to happen is there will be further penalties and restrictions brought towards North Korea and sanctions and things like that, and just like they did with Iran, and there will be some words back and forth, but again, I highly doubt that we are going to see any type of major action, because if North Korea is just flying jets over South Korea and Japan, they haven't done anything yet. Okay, they may be showing us their strength and things like that, but so far they haven't done anything. So all it is just posturing. Until they actually do something, or somebody blows a plane out of the sky or whatever, I don't anticipate that that's going to go much higher, or the market will go much higher based on that, which is a potential skirmish or war with North Korea. The other thing is inflation, which is there is basically very little inflation. That's why interest rates are still so low. And the other would be the dollar falling substantially, that would move gold higher. But the fact is that, no matter what the feeling is on Trump at this particular point, the U.S. is still the major reserve currency, and I just don't see the U.S. dollar falling more than what it already did. So, in actual fact, we've seen the market come back up in the dollar about 2 cents or 3 cents in the past few weeks, but right now it's just sort of trading in a range because there's so much uncertainty in the market. So, again, at this point, Randy, we see gold and silver continuing to trade in this range until we can get above $13.80 in gold and probably close to $20 in silver. Oil isn't doing an awful lot at this point, but, oil did increase during the hurricanes, but then again, there was a glut of oil on the market, and it tends to fall back. And right now, the U.S. dollar is trading right at around the 93-cent level. So, all in all, the markets are still doing the thing. The Canadian dollar is trading at 125. We anticipate that the Canadian dollar will fall a little bit further as the U.S. dollar does strengthen again. So, again, Randy, until we see certain situations happen, we're not going to break out of this boring market that we've been in, actually for quite a long time now. It doesn't seem like 7 years, but it is, because it was 2011 that gold hit 1920, when all of a sudden the exchanges raised the margin requirements and dropped gold from 1920 all the way down to 1,050, and that's what's happened in the commodity markets.
It's very hard to make money in the financial world we find ourselves in today. As we've talked about on past shows, had info in past newsletters, some of the smartest investors in the world that run large sums of money, hedge fund money, getting out of the industry. Tells you what's going on. And we'll have a story here that we talk about momentarily that sort of goes in that direction as well. So the question is, how do you invest today so you can retire tomorrow? And that's why we do our radio program. That's why we have our free seminars. We have our free weekly newsletter. Harold is there to help educate you and help you make money so you can put yourself in a position that you can retire. Connect with Harold at rarecoloreddiamonds.com. If you have any questions about your financial situation, the financial markets, speak with Harold personally, privately. Everything discussed is confidential. The call is free. 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com, and we'll talk about diamonds in the second half of the show, is a 1+ carat radiant cut fancy blue-green diamond, extremely rare, one of a kind worldwide. We'll talk about that diamond and more in the second half of the show. Now, Harold touched on it, and it is very true that when a market goes down, just because it comes back, it does not necessarily mean that it's really come back. In fact, it was interesting to note, Jeff Clark mentioned during the week, the NASDAQ fell 78% in the tech wreck of early 2000s. Most investors look at a chart and see the index is now higher on a nominal basis. But adjusted for inflation, it's still down 17.6% from its March 2000 peak. In other words, almost 2 decades later, tech stocks are not back to the same level of purchasing power, despite the index being higher on a nominal basis. Keep that in mind when you are investing. The NASDAQ down close to 80% in the tech wreck of the early 2000s, it's still technically not back. Everybody is investing in what they call the FANG stocks: Facebook, Amazon, Netflix, Google. Those are the hot companies. And we actually have a story this week in our free weekly newsletter, and we encourage you to get our free weekly newsletter from Harold, 1-800-432-1022. We know you're busy. We know you have a busy life, but we also know, too, that you work hard for your money, and you want that money to be protected, and you want to profit at the same time. That's why we do the show. That's why we do the newsletter. You can go through it in minutes and be up to date on the financial markets for the week. Connect with Harold. Get our free weekly newsletter, 1-800-432-1022. But, human analysts are still overwhelmingly bullish on Alphabet and Facebook, FANG stocks. A new robot analyst at Wells Fargo says it's time to sell. Now, that's a big contradiction from humans. Late last month, Wells Fargo analyst Ken Sena introduced AIERA, short for Artificial Intelligent Equity Research Analyst, a bot that does massive automated grunt work to support human analysts as they track stocks and make trade recommendations. And while analysts are known to skew towards buy ratings, the new bot doesn't seem to share that bias. You remember back in the past when the stock market was raging and no one would put a sell recommendation on any stock? That was one of the big questions with the financial crash. Why weren't analysts, why did they not get in trouble, along with some of the companies like Moody, the rating agencies? Now, AIERA's approach this week appears decidedly more conservative than last week, as she places a hold recommendation on 11 names and even goes so far as to place Google and Facebook in the sell category. Sena says in a new note sent out to clients on Friday, this is at odds with Wall Street's outlook. Facebook, a stock that has climbed 48% this year, has 42 buys out of 47 ratings, according to data compiled by Bloomberg. Google, parent Alphabet, of 24% in 2017, is similarly beloved, with 34 buys out of 41 ratings. It also is at odds with its investors. AIER's pessimism isn't enough to cause Sena and his team to remove their outperformance rating on both stocks. But it is very interesting as we start to get into analytics that are based on just robots or whatever you want to call them, artificial intelligence, AI. They're saying get out of Alphabet, get out of Facebook. Now, one of the other stories that really caught my attention this week, Harold, and it deals with the stock market as well. Nobel economist Thayer says he's nervous about the stock market. A buoyant and complacent stock market is worrying Richard H. Thaler, the University of Chicago professor who this week won the Nobel Prize in economics. And this is important. This is a great quote. We seem to be living in the riskiest moment of our lives, and yet the stock market seems to be napping. He says, speaking by phone to Bloomberg Television, I admit to not understanding it. The S&P 500 index has been reaching repeated records since U.S. President Trump's election in November amid steady growth in the U.S. economy and labor market, as well as expectations for lower taxes, though policy action in Washington has been limited. Thaler, who has made a career of studying irrational and temptation-driven actions among economic actors and won the Nobel Prize for such contributions to behavioral economics, expressed misgivings about the low volatility and continued optimism among investors. He says, I don't know about you, but I'm nervous. And it seems like when investors are nervous, they're prone to be spooked. Nothing seems to spook the market, and if the gains are based on tax reform expectations, surely investors should have lost confidence that was going to happen. The economist said that he didn't know where anyone would get confidence that tax reform is going to happen in the United States. But I think his big quote, Harold, and I think it's very important, we seem to be living in the riskiest moment of our lives, and yet the stock market seems to be napping. We have about 3 minutes left in our segment.
Well, I agree with the fact that we are sitting in a very volatile and dangerous time. It's almost like a compressed spring. You know, it's got to spring out soon. The fact is that a lot of things happening don't make an awful lot of sense. So we have to be very, very careful. I wouldn't be in the stock market at this point. Don't forget, the last time the Dow really plummeted was 2008. It's almost 10 years ago. The market is due for a correction, and on top of that, you've got all these problems in the market and things that have never gone away. There's just so many situations that could hurt this market and have it tumble, but the general public, they are blind to that. They see it as a market going up. They see it as easy money, and they run in with both fists and jump in and, you know, without even thinking about it. But this market hasn't taken a significant drop since 2008, and the fact is that it is due for a big correction, along with the fact that you've got all these other situations in the market that could really propel it, you know, further down. But the Dow seems to, you know, shrug off almost every situation at this point here because you have so much money coming in from overseas. It's not that, again, I'll repeat it, the economy is not good here, but you've got all this money going into the market. The market has got to go up. So that's the only reason I see this market going up. Not with, you know, Sears is out of business. So many of the major retailers are gone and will be closing. It's going to hurt the commercial real estate market. You know, things are changing, and if people don't see it, they're going to get hurt by the markets.
We have an article in our free weekly newsletter, and it is very interesting. This is a must read, and we can send it out to you. Is gold really a good hedge? Now, Bloomberg's macro man, Cameron Kreis, he's a columnist, set out to test whether gold really offers protection against market turmoil. What he found was a bit of a surprise. And I'm not going to read the whole story for you. I would encourage you to get it from Harold. But long story short, yes, gold is a good hedge. And you can read that article. There's charts in there. There's information in there. They believe that you should have gold in your portfolio at all times. And yes, it is a good hedge against what's happening in the financial markets and geopolitically as well. Get our free weekly newsletter from Harold, 1-800-432-1022, the website rarecoloreddiamonds.com, our featured diamond of the week. Go take a look. Beautiful video of this diamond, rarecoloreddiamonds.com. The diamond is a 1+ carat radiant cut, fancy blue-green diamond, extremely rare, one of a kind worldwide, and we will talk about that coming up in the second half of the show. We'll talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October the 13th, Friday the 13th. We're not superstitious. It's going to be a great day, 2017. Don't forget, if you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. They're streaming 24/7 there for you. You can also be a part of the podcast we have for the radio show. We are portable. We go anywhere you do. You can connect with the podcast there or go to iTunes and type in The World Financial Report on Radio. One of the big stories of the week, Sears Canada going to court on a Friday today, and obviously we won't know because we're taping our show on Friday what happens, but more than likely Sears Canada will be liquidated, 12,000 people losing their jobs. And it's a tough break for those that are being affected, and our hearts go out to them. Featured diamond of the week from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy blue-green diamond. Extremely rare, one of a kind worldwide. You can see it online featured diamond of the week, rare colored diamonds. And Harold, give us a little bit of a rundown on this diamond. It is a beauty.
Better believe it, Randy. It is. It's a very, very rare color because what makes a diamond blue is boron, and what makes a diamond green is uranium. So both of those minerals had to be present in the ground at that particular time to make that diamond that particular color. It's extremely rare. I mean, a blue diamond is rare, and we've covered those for the last 10 years, and we've seen the huge increase in the price of blue diamonds, especially, larger vivid blues. But all blue diamonds at this point here of good quality have just done extremely well. Same scenario with greens. Earlier this year, we saw the Aurora green sell for $15 million. It was only a 5-carat diamond. So both green and blue are extremely rare, but to get them together and for the GIA to actually grade them as a bluish green or a blue-green diamond is extremely rare. And you can tell by the color of it, Randy. The color is absolutely stunning. It's always been one of my favorite diamonds.
Take a look at it online, rarecoloreddiamonds.com, featured Diamond of the Week. One of the stories of the week, a record 37-carat pink diamond is up for sale. Sotheby's will auction the Raja pink diamond next month for an estimated $20 to $30 million. The company announced last week the weighing of the diamond came in at 37.30 carats. The diamond is the largest fancy, intense pink diamond on record. According to Sotheby's, it will headline the auction house's Magnificent Jewels and Nobles Jewels sale in Geneva on November the 15th. Now, I should mention that Christie's, they have a sale right around that same period of time. And they will have a big diamond to showcase for their auction as well. When we know what it is, we will pass it on to you. Now, they say the discovery of any pink diamond is exceptional, but the Raja Pink's remarkable size and intensity of color places it in a rarefied company of the most important pink diamonds known, says David Bennett, chairman of Sotheby's International Jewelry Division. The auction house set the current record price for a fancy, intense pink diamond when it sold the Graph Pink for $46.2 million or $1.86 million per carat in November 2010. At 24.78 carats, the Graph Pink is a third smaller than the Raja Pink and has a lighter color, Sotheby's noted. Since that sale, the auction market for exceptionally rare and beautiful colored diamonds, notably pinks and blues, have been very strong. The rough diamond that yielded the Raja Pink was studied for over a year after it was discovered in 2015. A master cutter crafted it into a sparkling, cushion-modified brilliant cut. The GIA of America characterized the diamond as an astonishing stone, describing its hue as a very bright and ravishing, fancy, intense pink color. For a diamond to display strong, unmodified pink color like that observed in the Raja Pink is rare, particularly at such a big, considerable weight, according to the GIA. So, Harold, this is a monster diamond that's coming up for sale, Sotheby's, November 15, and can't wait to see what Christie's has for their sale in Geneva around that time. But this is something we've talked about for a long time. The rough diamond was studied for over a year after it was discovered, and a master cutter spent a long period of time figuring it out and actually cutting it to create nature's art. It's up there with a masterpiece like a Van Gogh, a Picasso. It's nature's art, and it will come up for sale, and it should be very exciting to see where this diamond goes. It would not surprise me if it goes for beyond the $30 million they think it may go for, Harold.
I agree. Now, the fact is that it's huge, over 37 carats. It's an intense pink. So other diamonds that we've seen go to auction were and sold for record prices were mostly vivids, which is the way GIA grades the highest saturation of color is vivid. Then comes deep, but very seldom do you see a deep pink. most people don't know this, but sometimes if a diamond does come in as a deep pink, it could literally be cut into a red diamond, and we've had success doing that, on very, very rare occasion. And then under deep comes intense. So the color is heavily saturated. It's a beautiful diamond. The color is absolutely stunning. I didn't see a clarity on it, but I'm sure it's of high clarity. I agree with you, Randy. The diamond could literally sell for, and should sell for over $1 million a carat, because vivid pinks of this kind of color, well, vivid pinks are a higher color grade, but they've sold for as much as $3 million, and we anticipate once the Argyle mine closes and these larger diamonds come out, it would not be unreasonable to see these diamonds trading at $4 to $5 million a carat when they're vivid. So I think at $1 million a carat for an intense diamond of this size, I think it's an amazing price. But I do believe it could sell for well over $30 million. In fact, it should.
Well, you look at Lawrence Graff picking up big pink diamonds in the past. It would not surprise me at all if he shows up at that sale and picks up the Raja pink. Would not surprise me a bit. Our featured diamond, and it is a big one too. It's a 1+ carat radiant cut, fancy blue-green diamond, extremely rare. The color is amazing. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. It's a one-of-a-kind worldwide diamond from the vaults of rarecoloreddiamonds.com. And Harold, I know in our vaults we have some of the world's rarest and most important works of nature's art. And if anybody is looking for a particular diamond, whether it be a red, a green, a blue, a pink, yellows, you have a wide selection in the rarecoloreddiamond.com vaults where you can pop in there, take a look, and you'll be more than happy to help people with a particular color that they may be interested in.
Very true, Randy. We have diamonds starting actually as low as $10,000, and we have certain diamonds put away that are over 30 to 40 million, including a 100-carat, deep flawless Type 2A perfect diamond. One of the rarest diamonds actually ever found. We have, and it's an emerald cut, so it's absolutely stunning. The fact is that we have over 3,000 pieces of museum quality jewelry. In fact, through our company, Diamanti Atelier, we have some of the most beautiful diamond jewelry you've ever seen, including the last 8 pieces of Elizabeth Taylor's estate. So we're into the hard asset market, alternative assets. We don't trade the paper markets. We don't trade in paper stocks, and we don't trade in paper commodities. Everything that we do, we own outright. And that's the way in this type of market you need to trade. The fact is that people that want to take a risk and try to make a lot of money but have the potential of losing a lot of money, you leverage your positions, whether it's in gold or silver, whether it's in stocks or whatever it is. If the market goes your way, you could make a lot of money. If the market goes against you, you could lose all or more than you put into the market. We don't do that. We buy the physical market. We buy the physical gold. We buy the physical diamonds, and we hold on to them. The fact is that trading in diamonds is not a short-term situation. You don't buy them for a couple of years and expect to make money on them. Fact is that diamonds should be put away for 10, 20 years or longer, possibly. We brought up many times about diamonds that have stayed within families and have gone from minor amounts to massive amounts. The most famous of all was obviously the diamonds that we brought up before, which was Shirley Temple's diamond, bought in 1940, blue diamond for $7,100 and sold last year or this year for $25 million. So the longer you hold on to these type of assets, the more and more they go up in value. Fact is that in a lot of cases, these type of assets are handed down from generation to generation, because the longer you hold them, the more and more valuable they become. When you hold them for a short term, it's not like a stock or a commodity that goes up, on a short-term basis. They've got to be rare. They've got to be very few of them available in the marketplace, and that takes time. So we believe that in this day and age, with this type of market, as volatile as they are, and basically a lot of markets not making a lot of sense right now, we urge you to look at the alternative asset market. The diamond market is a great long-term investment because two major things that you look at when you invest. One is to keep your money, capital preservation. Two is to make a profit or return on your investment, which is capital appreciation. Most importantly is capital that you keep your investment, that you're not risking your money every day. So capital preservation, in my opinion, is the most important thing. Not every trade is going to work out. Not every deal is going to work out. But the fact is that if you stay out of the volatile, heavily leveraged futures and stock markets, you're not going to get trapped in those situations. So many people back in 2008 and 9 lost everything when the Dow dropped from 14 to 6,500. If you owned the stock outright, it was no big deal. You held on to it. But most people were into making big money, and they heavily leveraged their position and ended up having margin calls and losing way more than what they put in. In fact, most people that were in that position got forced liquidated, meaning that the exchanges forced them out because they didn't have enough capital backing up their investment. You don't want to gamble in the markets. You don't want to gamble with your homes. What we're seeing in Toronto and Vancouver is exactly that. Look how volatile the the real estate markets have been in Canada due to the fact that people are speculating with their homes. That's a no-no. That's the last thing you ever do is gamble with the equity in your home because, again, most people don't understand that market. And the fact is that all it takes is one wrong down move and you're out of the market. So, again, we're saying at this point, get into longer-term investments that are not as volatile as stocks and commodities type of thing at this point, and never leverage your positions. It's the worst thing you can do in this type of market.
It's very hard to make money in the financial world we find ourselves in today, as we touched on before with the Nobel Prize winner Thaler saying one of the riskiest times ever that he has ever seen in investing. And that's something that should be a wake-up call for all of us. We're all worried about making money and then having it taken away in some big, massive correction, as David Stockman, who was in the Reagan administration, mentioned last week when we read that story about him, where he's worried about a major pullback of anywhere from 50 to 70%. So the question is, will we ever be able to retire? We're in a low interest rate environment. Central banks have really manipulated stocks and bonds and real estate to a point where they are historically overvalued and could face a major correction at any time. And then you have government intervention into markets like the housing markets of Vancouver and Toronto. There's Bill C-15. If you don't know what Bill C-15 in Canada means, speak with Harold. Bank bail-ins, negative interest rates around the world, a weak Canadian dollar, oil prices very volatile, and then we are moving into a cashless society. And then there is the cryptocurrencies. People are wondering, what exactly is a cryptocurrency? Lots of financial questions, and you are looking for answers. And that's why we do our radio show. That's why Harold is there to take your calls on a daily, weekly, and monthly, yearly basis. We do the radio show, we do our free weekly newsletters, and Harold will be happy to speak with you personally and privately at 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1+ carat radiant cut fancy blue-green diamond, extremely rare, one of a kind worldwide. See it online at rarecoloreddiamonds.com. But when it comes to diamonds, the most secure and profitable investment, millions of years in the making, Rare Colored Diamonds. Nature's art, private, portable, stable wealth. And diamonds have done very, very well over the last 10, 15 years since Harold brought them to our attention. In fact, we mentioned this before from Joseph Lipton, CEO of Secured Worldwide. Diamonds are a portable, alternative store of savings and wealth that are being increasingly utilized for diversification. And in a new and uncertain world where surprises will continue to catch us all off guard, portability should absolutely be understood as diversification. The ability to easily move savings and wealth is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. They are arguably the most densest and the most portable form of savings and wealth in existence. Real estate is fixed. $1 million worth of gold weighs about 10 kilos, as much as a large car tire, but a handful of collection-quality diamonds can be worth many millions in a pocket that can be transported very, very quickly and safely. And Harold, when we're sending out our free weekly newsletter, I really encourage people to read one of the articles that we have this week, Is Gold Really a Good Hedge? And an analysis was done by, his name is Cameron Krice. He's a columnist with Bloomberg, and he went and he looked and he found that, yes, you're finding that without a doubt, gold is a good hedge in a diversified portfolio. But I think even more important for people to read this week is Nobel economist Thaler coming out and saying, we seem to be living in the riskiest moment of our lives, and yet the stock market seems to be napping. And Harold, in that case, what do we do?
Don't speculate and don't leverage. The fact is that I wouldn't be in the stock market. I'm not a big fan of it anyways. I do believe that, at times that there is a plunge protection team that does monitor the market and stop it from getting out of control, unless a situation like 2008 happens where, everybody's just selling, mass selling, and the market's just, totally falling apart. So to me, that tells me it's a manipulated market, and those are not the type of markets that I want to be in, because I don't have that kind of inside information. Only the people on Wall Street do. So we shy away from those type of scenarios, and the fact is that right now the commodity markets are looking for a direction. Now we're getting closer in gold because of the geopolitical situations that are going on, because of Trump fighting with North Korea and so. There is the potential for gold to break above 1380, but it would really take an awful lot for gold to get above that price. I'd love to see gold break it for the right reason. I'd love to see two closes above it and start to get back into, a running market in gold right now. But at this particular point, aside from the situation with North Korea, there's no situation that's really going to push gold that much higher unless the U.S. dollar was to plummet, and I just don't see that happening. Inflation is the other scenario, but I do also agree with what we have in the newsletter this week that you should own gold as a hedge, because at any time we could wake up and find out that we are at war or something has happened, and all of a sudden the markets are going crazy, and then you have to scramble to try to protect your position. So there's nothing wrong with having some safety in the market, and gold has always been that type of hedge. The only problem with gold at this time is that it is manipulated, and we certainly have seen that as we've traded in the biggest bull market in history from 2000 to 2011. That bull market in gold and silver literally made fortunes for a lot of our clients.
Our featured diamond of the week from rarecoloreddiamonds.com. It is a 1+ carat radiant cut fancy blue-green diamond, extremely rare, one of a kind worldwide. See it online at rarecoloreddiamonds.com. And as we've spoken about, diamonds, they are portable. And Melvin Kirtley is with Tiffany & Company. He's their chief gemologist. He said colored diamonds are even rarer than colorless diamonds. And when you get into colored diamonds like pink or very intense shades of pink or green or blue or even red, which is very, very rare, the amount that is available in the world is next to nothing. There are more Picassos in the world than there are colored diamonds. The rarity is enormous, so the value is incredible. And you take a look at Richard Russell saying another high-class area of tangibles is diamonds. You can, and do this legally, transport $10 million worth of diamonds in the pocket of your suit. In 244 years of auctions, only 18 pink diamonds of more than 10 carats, 2 grams, have come up for sale at Christie's. Pink diamond prices have tripled over the past 15 years, and on average, would be at least 25 to 30 times the value of white diamonds. According to David Farden, he's the CEO of Lindley's, and Josephine Johnson, who is with the pink Argyle tender with the Argyle mine, said between 2002 and 2010, the index price for diamonds from the Argyle pink diamond tender increased 108%, while white diamonds rose 22%. And here it is. We're taping the show on October 13, and we should know here very quickly, because the Argyle pink diamond tender was ending October the 11th. So there were approximately 50-plus diamonds in the Argyle pink diamond tender, and the winning bids, they should know who they are now. That will be released, obviously, to the public, not the names, but some of the different stones, and different people come out and actually say that, yes, I got this diamond. But we should know fairly soon how well the Argyle pink diamond tender did, as October 11 was the day to open the seal bids and make decisions on who would get what diamond and so forth. But Harold, we have about 2 minutes left here. Now is the time when you have a Nobel Prize winning economist coming out and warning us about very rare and unusual times and the risk associated with stocks. Now is a time to be very, very aware of your investments.
You bet, Randy. Again, you can't afford to make a mistake at this particular point because it's very, very difficult to make back that money. It isn't like back in the times when you could, pick a stock based on its earnings and everything like that. Now, everything is discombobulated. You read everything and you understand it, and you look at the technicals and the fundamentals and all that, but the bottom line is nothing seems to match up. You've got 6 or 7 really strong stocks, in the Dow at this particular point, which is the major part of the move. And if you look at other stocks and go back even to 2008 before the market plummeted, they're not even back to that level. And as you brought up, Randy, at the beginning of the show, with the NASDAQ, when it fell from 5,000 to 1,000 in 1999, it's now up to 6,500. But when you factor into other factors, it still hasn't made it back to the levels, back in 2000. So it's just a crazy time. I don't invest in paper assets at all. I would suggest that at this particular point, if you are in stocks, use some stop losses in there because there's a lot of danger in the market, and that's not an area that I'm comfortable trading at this particular time.
Well, once again, Nobel economist Richard Thaler, the University of Chicago professor, won the Nobel Prize, coming out saying we seem to be living in the riskiest moments of our lives and that the stock market seems to be napping. And that is a major concern. And as Harold touched on, we have it in our free weekly newsletter. You can take a look at it for yourself. The NASDAQ fell 78% in the tech wreck. Now, it took it almost 20 years to get back to where it was, but due to inflation, it's still down 17.6% from the March 2000 peak. In other words, almost 20 years later, tech stocks still not the same level of purchasing power. So when people tell you, oh, don't worry, it always comes back, be somewhat skeptical of that because some investments do not come back for 10, 20, 30, 40 years. It can take a long time, and obviously you better be a very patient investor or be willing to take your losses. And sometimes, as Harold says, your best loss is your first loss. Just get it over with and take it. Harold, thank you for your knowledge and another outstanding show. It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day. Take a look at our featured diamond of the week, a 1+ carat radiant cut fancy blue-green diamond, extremely rare, one-of-a-kind worldwide. Take a look, rarecolorediamonds.com, featured diamond of the week. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.